Oh, perfect. Thanks a lot, Savage. Okay, so who am I? So I'm Nix. I'm 23. I've been trading for a few years now. I first got into crypto, started mining, mining Ethereum, and then mining got patched, so I stopped trading crypto. I used to just like trade spot, and I lost all my money. Then I shifted to futures. Right, I tried everything. I tried supply demand. I tried patterns like bear flag, bull flag. I think I lost about like 10K on that because I used to trade with my own capital. Then I got came to ICT. ICT was really famous with prop firms because whenever you search ICT on YouTube, it's a lot of prop firm videos, and that's where I found Casper. And he was on YouTube. He at that time, like, Casper was an analyst at Playbit, so that's how I came to Playbit, and that's where I learned the ILM model through the Playboys course, and then backtested on years of data. I have backtested on like so much data on everything on like gold, and eventually I see that it's the cleanest on MNQ and ES. So then I started only backtesting on MNQ. On like years of data, I used to do this all day, and then I sort of formed my model around it. That works the best, um, according to how I trade. Like I like to like scalp really quickly. I think it's better for my emotions, so I don't have to stay in a trade for too long. Like I don't see a trade go up for like 10 minutes and then come back down. I just get in, get out in like 5 minutes. Yeah. Yeah. So okay. So let's talk a little bit about psychology first, right? It is the hardest thing. Like trading is so hard. You might feel like ILM's a money glitch. It's not. Trading is really, really hard because you're going against yourself, basically, right? You're going against traders who've traded for 40 plus years. You're going against these multi-million dollar algorithms. You're going against AI. It's really hard, right? If you're like kind of new to trading, like it's okay. You don't have to be like hard on yourself. You're gonna lose money for the first few months, right? And eventually, don't give up. You see what's working the best for you. That is my model. It not might not work perfectly for you, um, but yeah, you have to like change the model according to yourself, right? Like you can't just copy trade someone. Like yeah. Um, about risk, this is the hardest thing. People generally do is they risk something they can't handle, trying to make a lot of money. They lose one trade. They're like, oh no, I've lost so much. I might as well double my risk. Try to get it back, get it all back, and they take like a bullshit setup or just reverse their trade, lose all their money. Yeah. So I would say risk 200 for like B setups, B plus setups, and 300 for A plus setups. I'll explain what B plus A plus are soon, but I'm just talking about risk. Yeah. Um, yeah, I generally risk a little bit more uh, because I have mastered my psychology a little bit more now. But ideally, this is enough. I think this is yeah. And for the prop firm, I think 50K is the best account. You don't need more. Yeah. 1 second. It's too. 1 second. Yeah, you don't need more than 50K. 100K is unnecessary. 150K is unnecessary, is what I feel, because you're just wasting money buying the challenge, right? One argument is because you get more contracts to trade with and you get a bigger drawdown, but your profit target is also larger. And eventually, on top step, like after you reach like a certain amount of balance, you can pretty much trade more contracts than two on NQ. So it doesn't matter. Um, Yeah, so this is something people struggle with. So I'm going to give you a trick of how to know how many contracts to enter. It's like something I figured out. So what you do is use the long tool and short tool you have on TradingView. So it should be here, long, yeah. Um, and you can use these settings in one guide. So whatever you want to risk, who's that? Ryan, can you please mute Ryan Jackson? Mute him. Okay, so whatever you want to risk, say $200, you can put it here. 50% risk, and here it should show how many contracts you enter based on how far your stop loss is. Joke. Who's that? Sorry guys, I'm gonna mute you. If you have, you can just put it in chat or something. I'll reply. Okay, yeah. So that's the amount of contracts you should enter. And it's really quick. And this only works for MNQ, by the way, but it's really quick. Like you don't have to see 4 points, these many contracts. Yeah. Now let's come to market structure. Okay, let's come to market structure. So price moves in waves. I think we all know that. I'm not gonna go. It's not super basic. I'm just gonna make it I'll make it super basic, but still explain what I mean, bro. Where's the brush? Oh, yeah, there you go. So we go up like this, and then we come down uh, like this. Yeah. Yeah. So the whole point of my model is to know when we come down, like to catch the reversal, basically, right? So here, let's say we have a liquidity sweep. We get an inversion here, and we take the short here. Right? That's the whole model. We take the short, stops close above, and we take it all the way down. Right. So yeah, price moves in trends. We hit this liquidity pool here. So basically, what's the idea here? The idea is that at this pool, there's a lot of stop orders, right? And this pool is something like London high or Asia high. And once those stop orders get filled, the market structure reverses, and we get into from a buy model to a sell model, and that's where the inversion gaps come. Yeah. Those key cats. Mute, please. Mute. Guys, please mute, guys.
This is what.
Okay. Okay. Yeah. So that's about market structure. Now let's come to what is the ILM. So ILM, everyone knows there's two things to an ILM. One is an inversion, and one is a liquidity sweep. Right? No sweep, no trade, guys. If there is no sweep, you do not take a trade at all. Like no sweep, no trade. That should be in your checklist, right? No sweep, no trade. Okay, so first let's talk a little bit about what exactly is my variation and how is it different. So what I do is wait for a sweep, right? Wait for a sweep, and then once we invert the gap, we enter along here. Okay, this is an A plus setup. So typically, what I would do is if you're going really fast, because I trade on like the 30-second, 1 minute, 2 minute, right? So sometimes you might get a close really high, like here. I would enter half, right? I would enter half. And in fact, we did close here above the gap. This is not a good close, but it's still a valid close. So I would enter half, and if we close below, I would lose basically 0.5 hour, right? And this is why I put my stop a candle close below, not a wick. I wait for a candle close, right? Normally, what Hunter or someone else does is they move the stop here down to the low of the day or where the sweep was, and then that's safer. But then you also make less money, right? Your risk to reward is less. So from backtesting, I think this works the best for me consistently. Yeah, you might lose some trades, but generally what I see is if we do close a candle below, the order, the main reason why we inverse the order are now getting inverse. So we should anyways go hit this stop below. So I don't see a point of keeping a stop here when if we inverse here, we anyways go down anyways, because it's an inversion of an inversion, right? So the best stop is a candle close below for me. Yeah. And then an order block. I'll explain everything here. I'll explain what an order block is in basics when you come down to the checklist. But yeah, then we have an order block, and this would be a better entry. So this is where I would enter my other half, my other 50%, and then yeah, you can just write it up. Yeah, and about break evens, right? I do have a lot of break even trades. I would say like 40 to 50% of my trades are break even trades, and I'm okay with that. I'm okay with that because out of those 50% trades, 30 would have been losses if I wouldn't have gone break even. So I'm really okay with going break even. I think break even is still a win, right? I don't count break even as losses. So when do I go break even? So I'll explain what highs and lows are first. Yeah. What's the internal high and external high? So let's take this range. Let's take a range from this point to this point. Yeah. So if that's our range, this would be an external high. This would be an external low. Everything inside would be internal. So this is an internal high. Let's take maybe a better range. Maybe till here. Yeah. So this is an internal low, internal low, internal low, internal high, internal high, internal high, right? So yeah, so you get a basic idea what internal high is. This would be an internal high, right? So let's say we take this inverse. Is that a good inverse? No, this is not a good inverse. It's a really small gap. Um, Plus no liquidity sweep. Yeah, there's no setup here. But okay, yeah, let's assume we take like, let's say, a random inverse like here. I would never take this, but we take a random inverse here. Then we would wait for price to sweep here because this is the next internal low. So once price takes that, I don't have to hold full TP. I'm just gonna go break even, trim something. If it's more than 1 hour, I'm gonna trim. So you enter short here. Yeah, this would be our target. This would be our break even. Obviously, I wouldn't take this gap because there's another big gap down. So ideally, this would be the gap and the close would be here. But I hope you get the point. Like the next low is where I could go break even, or the next high. Yeah, for example, this one, right? So if I take this, you see these highs? That's not this one, sorry. That saves you from a loss. So it's really quick, but it's mechanical, and it really works, right? Like, so if you take this inversion, you say, oh, there's no sweep, but you're like, oh, maybe I take this internal sweep as a sweep. It's not, but you can say that. Yeah, you say, oh, I like this sweep, and go enter long here. I really think we're gonna pump today. My bias is long, okay? And what happens is it takes this internal high, uh, and then you see you fall break even, and then just massive dump, right? So you saved yourself from a loss here. And why did I take this internal high and not this? Is because this is the high of the same leg, right? It's not a previous internal high before the inversion, but it's the high of the inversion. So this is the next internal high. So as soon as it gets swept, you're like, okay, I'm going break even here. It's really quick, but you still have it's a 3-minute chart. So you still have 3 whole minutes to go break even, right? And it found equal highs here. See that? Oh wait, sorry, my bad. This is the next internal high. Yeah, this is an equal high, so it will definitely get taken again. Equal high is one of the strongest drawn liquidity. So I see, oh, okay, then I enter long here, and you have whole 3 minutes, right? You take that, you still have 3 minutes to go break even, and you're like, oh, that's a break even. I'm okay with that. At least it saved me from a loss, right? So that's basically my break even strategy. And it again depends on everyone. Some people don't like it because they're not able to handle it emotionally. Being stopped at break even after being in profit, they don't like it, so they don't do it. But more often than not, it saves me uh, a lot. Yeah. Now, yeah, let's okay. So there's also like LRLR. A lot of people know what LRLR is, so that really helps in the setup. We have a sweep, we have LRLR, momentum. I'll talk about everything. I'll talk about everything soon. But yeah, this is a really good setup, guys. The only issue is it's a bit pre-market, but it's really good. Now liquidity sweep. What are the liquidities that I'm looking for? Right? There's two main liquidity models that I really like. What's in someone put something in chat. Wouldn't doing this risk losing a lot more than planned? Dead trimes, what do you mean? 741. Oh, that's long back. What do you mean? Oh, you mean waiting for close? Yeah, yeah. So yeah, I'll explain you what I mean. I'll explain you what I mean exactly. Yeah, that's a really good question. That's what I'm worried about the most. Yeah. So yeah, so when I say like a stop below, that doesn't mean it has to like touch the FAG, right? Yes, you would lose more than an hour. You would lose more than 1 hour, but in an ideal case, you shouldn't lose like 1.5 or 2 hour. Like 1.5 is the max you could lose. Like as soon as because once it goes like 2 hour, like it's aggressively dumped anyways, that it takes a previous candle, right? I do have hard stops, guys. Of course, I do have hard stops. A normal stop would be a close below, and a hard stop would be either a swing low, an internal low, basically an external low, internal low. Like for example, here, right? So I go long here, for example. A stop would be close below, but you see you got wrecked here. You wouldn't wait for a close below. I technically even if it's a break even, let's say you didn't get stop break even, okay? Let's say like this never hit, okay? And then you just started losing. What I would do is I would have my hard stop here, right? That's still not even like 1.5 hour, right? Um, and yeah, but you're still winning more than you're losing, so it shouldn't be that much of a deal. It shouldn't bring out that much variance in your trading. Yeah, that's what I feel. And I still feel like this is such a better stop than, let's say your stop was here, because you're getting wrecked anyways here, right? And you're also making less profit. So, and because I win more than I lose, I'm okay with losing a bit more than I lose, because anyways I make a lot more than what I lose, right? Because my stop is not here. If my stop was here, I wouldn't make much anyways, because you see 1 hour is like, oh, now I have to go 2 hour to actually get 1 hour. But when I'm here, like 1 hour is 1 hour, right? You know what I mean? What is Sod saying? What if the new bullish cap would be bigger than the inversion? If he closed below the FVG but held the bullish imbalance, how do you? Wait, I don't understand. What if the new cap would be bigger than the inversion? You gotta close below. What do you mean? Oh, you mean like if you have a gap? If you have a gap that is bigger, like a wait. So I know what you mean. I think I know what you mean. So you mean a BPR? You have a BPR, but there's a fair value gap here. Is that what you mean? Like we have a gap here. So this we close above, and you're talking about this gap. So you're waiting for this gap to close under. I think so. Yeah. In that case, like don't worry about all of that. Like it's very subjective, but also mechanically, you just stop out when you get stopped out below this. You could trim above that. You could have like a stop here. Like let's say we inverse this tiny gap, then I'll get stopped out. But yeah, it's just too much to think. I don't think you need that much to worry about. Yeah. So Chris is asking at what points do you trim? Okay. So about trims, right? Trim is again very subjective. It depends on your play style. So for example, if there is a really A plus setup, like if there's a data low or a data high like this, I don't really care about trimming because I know we're going to hit it anyways. I really have high conviction because from backtesting, I know data highs and data lows always get hit. 99% of the time they do get hit. So I would just let the whole thing run. I would just let the whole thing run. But if let's say we're going against the order flow, let's say we're in like a bullish market structure, or let's say we're in like a buy model, and I'm trying to short. Yeah, let's say we are like in this, and I'm trying to short here, right? Yeah, I'm trying to short here. Then I would only trim. This is really bad. Yeah, whatever. Then I'll only trim like if I'm going against the order flow, like if the order flow is clearly bullish, right? The trend is bullish, and I'm trying to short a bullish trend. Then I wouldn't hold for runners. If there's no obvious drawn liquidity, then I wouldn't hold. I would just trim. I would just take trims at internal highs and lows, like here. Who said that? Yeah, like at this high, I would take a trim. This high, I would take a trim, and I would hold runners till the final TB. Take profit. But yeah, these are the points. Like internal highs is where I would take profits. And also, like let's say you go 1 hour, I would sometimes if I see like the trend is really slow, I don't think we're not reversing the market structure here. Then I would just wait for price to go 1 hour, and I would take 50% off at 1 hour, and let the rest run. Then I wouldn't trim after that. I would trim a 50% of my contracts at 1 hour, go break even, and I'll just let it run to my final TP. Yeah. It's all really subjective. Trimming is really subjective, but ideally I would do that.
Yeah, would
Yeah. You can't join to the stream. Okay, do you look at Red Folder News on Forex Factory? Exactly. Yeah. Yeah. Bozo. Yeah. Bozo Baggins. Yeah. So Forex Factory is the best website for Red Folder News. Yeah. And before, so what I do is when I wake up, I see what are our overnight highs and lows. I'll come there, guys. I'll explain you what these are. And I see if you have news. I set an alert for when I have news. Wait for a wick like this, and I take a trade. I'll explain what these are as well in a bit. But yeah, to answer your question, yes, Forest Factory. Okay. So anyone has any doubts about the setup? You can talk if you want. You can unmute. If you have any questions about what exactly I'm doing here, what exactly is the close? Where does my heart stop? My heart stop would either be here or here. So you could do is like one candle before the inversion could be a hard stop. Okay, now this looks like a good hard stop in hindsight. But yeah, for example, this would be your hard stop here. Like this is your hard stop. That's yeah, or this depends. Uh, what session do you trade the most? I only trade New York AM, only New York AM, and sometimes I would trade after London, between London kill zone and New York, if you have like a good sweep. Not in this case, yeah. You see how dead price is in fucking these sessions. I hate these sessions. Here's H bar from yesterday. Was it huge? So do you lose 3 hour on this one trade? No, this trade I go break even because to be fair, I would never take this trade because we're so high in premium. I'll explain you what premium is as well. And there is no liquidity sweep, because London low is right here. Price will draw to London low, so you're going against the draw on liquidity, right? If you're going against a draw on liquidity in the first place, don't expect to win. Inversions fail when they're against the draw on liquidity. So you have to find the draw, and then find the draw, wait for a sweep, and then take your inversion, right? Um, are your B trades hard or soft stops at B? Hard stops. Hard stops at break even. If I see a sweep here, there is okay from backtesting on like years of data. I know that if we hit an internal high and get a market structure shift, there is no reason for us to come back to entry. There is no reason for us to come back to entry. Like a winning trade, 80% of the time does not come back to entry. I don't see why would it even come back to entry because we got to change the market structure. We took liquidity. We shouldn't dump here, right? I don't see why it should dump here. So I go break even. I'm okay with going break even. I'm okay with like a break even is better than a loss. It saves let's say I take 10 break even trades. One of them is a winner and one of them is a loser. In the end, I'm still break even. It's okay. I'm okay with going break even. I've tried everything. I think break even works the best for me. How to find the right draw liquidity because I've been struggling with it. Price is often going lower. Yeah, I'll come to that. I'll come to what is a good draw as well. Between 1 and 5 minute time frame, IFG work the best for you. 1 minute. I love 1 minute. 1 minute, 2 minute are the best. Five. I rarely take 5 minute. 5 minute is so slow. And the issue with 5 minute is your risk to reward is really low, right?
Anything.
Because 5 minute candles don't move that much. Who's talking? Cameron, can you mute, please? I'll mute him. Okay. Yeah. Yeah. So I generally don't take 5 minute, 1 minute, 30 second, 15 second. 15 seconds also low. I think I take 1 15 second like if there's like a really A+ new setup, or like once or twice a month. I take 15 seconds, but it's mostly just 1 minute. Yeah. I think 1 minute is pretty good. 1 minute, 2 minute is pretty good. And 30 second if we sweep and get an instant reaction. Because the market's not going to wait for you, right? The only reason I take 30 seconds, and I'll show you some really good examples by what I mean. Yeah. Okay, so sweep. Yeah, everyone understood this model here? Like what exactly I'm doing? I'll explain you what draw is and everything. But just the basic idea, like when do I enter? When do I stop out? When do I go break even? And where's my take profits? As long as you understand that, if you have any questions about that, then let me know. And I'll explain everything other than that soon. How can you identify A+? Yeah, I'll come there as well. Yeah, no, yeah, I'll come there. Everything clear about this? Okay. So about overnight highs and lows and data highs and lows. Okay, so what's in an ILM is an inversion and a liquidity sweep. Inversion and a liquidity sweep. No sweep, no trade. Just remember that. No sweep, no trade. You're not going to take bullshit setups. Like this is a bullshit setup. It's horrible. It's horrible. Where is the sweep? This is not a sweep. This is a sweep. Now you're swept here, but there is no inversion, so no trade. No sweep, no trade, no inversion, no trade. Okay. So now let's talk a little bit about liquidity. Okay. What is liquidity, guys? Does anyone know? Can someone unmute and tell me what liquidity is? What they think liquidity is, or if they know anything about liquidity? You can type
It's
it in chat if you want.
it's a
Yeah.
place where there are a bunch of orders,
Yeah,
stop
perfect. Yeah,
orders.
a lot of stop orders. Yeah, a lot of stop orders. It's where people get liquidated. People get out of their position, right? And the money goes back into the market. That's yeah, buy and sell orders, adjusting orders. Yeah, perfect. Yeah, resting. Resting is a good word. So generally we want resting liquidity. We want liquidity that's been there for a while. Because there's so many orders there that haven't gotten tagged yet. So we want resting liquidity, right? Yeah. So what is resting liquidity is basically overnight highs and lows. And what I mean by overnight highs and lows is London highs and London lows, Asia high and Asia low. So that's resting liquidity because price has been resting there since overnight, right? There are a lot of orders here throughout the whole session. Everyone who's sold is going to have their stops at the high of the session, anywhere between these lines, right? You can see a nice LRLR forming here. Yeah. So that's basically liquidity. So what are the liquidity zones? What are the liquidity levels I'm looking for? The best liquidity to target, where I want the price to draw, is these overnight levels, equal highs and equal lows, data highs and data lows, previous day highs and previous day lows, 1 hour highs and 1 hour lows, 4 hour highs and 4 hour lows. I don't care about anything else. I don't care because I'm scalping weekly highs and lows, and they don't really matter because they're still daily highs and lows, monthly highs and lows. I don't care, right? So, okay, yeah. So it doesn't matter, right? So I'm only looking for the overnight highs and lows, like London high, London low, Asia high, Asia low, and previous day high lows and equal highs, equal lows. Guys, equal highs, equal lows are so strong to draw. Price draws to equal highs and lows almost 99% of the time. They're so good. They're so good, right? Especially if you have an equal high from London to the current session, those are really good. Can you write it down, please? It's in the checklist. I'll come there. It's all in here. It's all in here. I'll come here. I've spoken about all the liquidity here. You can see draw on liquidity, equal highs, equal lows, Asia highs. Yeah. Explain further. Yeah. What do you mean by equal highs? Yeah, I'll come there. Okay. So okay. I'll talk about equal highs first. There's an indicator for equal highs and lows. Yeah, it's this one, out of options, equal highs and lows. And you can enable that, and then you can see price will give you some good equal highs and lows that are algorithm. So there are two types of equal highs. One is algorithmically equal highs. That's basically to the tick. They're really the same. Let's see if we see any. Be on 5 minutes. Yeah, this is like algorithmically equal highs and lows, and I'm so sure they're gonna hit it soon. Like this week was so bad because we kept dumping. There was no model. There was nothing. Only org worked. But yeah, this is what I mean by equal high. Everything else is just already hit, so it's not showing me on the chart. How can I see something that's not hit? Okay, never mind. Let's go back to the one that we can see here. So yeah, so this is an algorithmically equal high and low. You can use this indicator. You can see them in real time. But right now, everything, because all the other equal highs and lows are already taken out, so it doesn't mark them. Is there an option to see them? No. I hope this is being recorded. Yeah, I think someone's recording. Savage is recording, right? Savage, you recording this? Oh, perfect. Thanks a lot, man. Yeah, so this is an equal high. It's algorithmically equal because it's algorithmically perfect. You can see to the tick, they're at the same level. And there's such a strong draw because algorithms like to hit it. Algorithms intentionally leave them here so that they can come and later tag them. So you can see how much price is dumped. And we will definitely get a market structure shift. Yeah, so we'll get a market structure shift here soon. Do we already get it? Because what? No? Who said that? Okay, so yeah, you get a market structure shift here. Come back. No, that's not valid. And we'll come back down and then we'll go hit it again. Yeah, another one here far back. So yeah, so we have left all these equal highs in the one in orange. We're definitely going to hit it. I'm so sure price is going to draw them soon. That we will hit these equal highs. We don't leave them like that. Yeah, this week was really horrible, guys. And we just kept dumping. It made no sense. But yeah, these are what I mean by equal highs. So price will come back to them. Yeah, equal highs and lows. So that's how you find the draw, right? You look for higher time frame equal highs and lows. Or time frame, can you play? Let me show. Can you try replay? Yeah, but then how much will you replay? I'm gonna have to sit here and keep replaying till I find something, right? Um, yeah, but I'll find a setup for you guys where we go hit the equal high. But you'll see like Hunter as well talk a lot about this. Hunter Jade, and they always talk about equal highs lows. They're really strong. They're algorithmically like it's meant where algorithms will leave orders intentionally. Yeah, look at this. This looks like, is this equal algorithmically? No, not exactly. It's relative. So there's some, this is called a relative equal high and low. They're also really strong. So yeah. Okay, and there's something called as engineered. So this is where I go like a little bit. What's the indicator? Yeah, it's this one. Equal highs and lows. What was it by? It's by out of options here. The equal highs and lows. Yeah. Yeah, there's something called as relative equal highs and lows, like here. So they'll also get hit a lot. I forgot what I was explaining to you guys. Fuck, what was I saying? I don't know. We'll come back. We'll come back to that. Yeah. Okay. Never mind. I forgot. I'll come back. So what do I do when I might wake up? Is I see I put an alert for sweep of either of these levels. So let's reset. So let's simulate maybe Friday. Okay. Let's simulate what would Friday look like. So I would wake up somewhere here, 7:30 New York time. The 1 minute chart. Yeah. Oh, there's so many equal highs and lows. Oh fuck. Okay. Yeah. So equal high, algorithmically. Okay. Yeah. So these ones are insignificant.
Algorithmically.
If they're just one candle apart, they don't mean anything. Okay.
Algorithmically.
They have to be something like this, at least 3 minutes apart. Like this doesn't mean anything.
Algorithmically. It's like an algorithmically way of saying. It's like an algorithmically way of saying. It's almost like an algorithmically way of saying. It's almost like an
What? What? Who was that? Yeah, it's an algorithmic way of saying. If we ever come, we will come back here. Okay. Yeah, because algorithms leave the orders there, and price is algorithmic, guys. I have seen it. We all know that. It's really obvious. Yeah, these are all bots trading everything. You're going against like super efficient bots. These are not human trades, guys. Most of them. Yeah. So what I would do is I would wait here. I have an indicator of myself. I will give that away soon. That basically plots this 50% line and it keeps updating it. So I'll give that to you guys as well soon. So let's say we woke up here, somewhere here. Yeah, I woke up here. I see, oh, we've left London highs, London lows, Asia highs. Asia has already been taken. We've tried to reverse, think get a reversal. What I would do is just wait. Wait for one of them to sweep, guys. So nothing happened. Bro, who's that? Can you mute? Guys, please mute if you're not talking, guys. Yeah. Okay. So yeah, wait, nothing happened. Things happening. Price is really boring. Yeah. Oh, by the way, you can see how good the 50% level is. As soon as we hit it, guys, algorithmically perfect. V inverse. Go up. Okay. So I also take trades based on that. Look at that. Look at how well the 50% is holding, guys. And I'll explain you what that level is as well when we go back to the checklist. Okay. But I just want to show you it's a really good level. Keep dumping. Wait, bro, the Friday was so fucking ass, bro. Like, yeah, look at that. Okay, yeah. So this is this is a V shape. V shape is basically it's one of the strongest signature in price. What? Shasta? What are you saying? I'm a bad teacher. I'm sorry. I don't teach, man. I don't do this for a living. I can improve. Can you tell me? Shasta, how can I help you? Like, How can I improve? Tell me. Oh, he's trolling. Oh, okay. No, it's okay. I'll just meet him. Okay, so are you joking? Well, man, don't joke. Okay, yeah. Man, don't troll, man. It's serious, okay? We're making money here. Okay. So yeah, so you wait for I would say I'll set alerts at London low and Asia low. As soon as you sweep that, I'll be like, okay, this looks like a good setup. Is it a market open? Yeah, it's a market open. So you see, let it run. Yeah. So that's so yeah. So I'll take this big gap. You see, we don't stop below it. There is no stop because we haven't closed below. And this is what I've seen from backtesting, guys. No, this would be entry here. This is what I've seen from backtesting is as long as we don't close below the gap, don't stop out. Don't stop out. And this is such a better stop than here. Like I know it from backtesting, guys. If we close below, we will go back here. Very high chance, guys. So yeah, London high will be your draw. And there are also so many equal highs, like equal highs after equal highs. I want to see them get hit. Yeah, so this would be ideally a break-even trade. You take this out, go break even instantly, or if you want, you can take a trim here, go break even, and you can re-enter off an order block. It's there's a lot of things, but yeah, you can see how London high got tagged, and you can see that we never close below this gap, ever. We never close. Where would your hard stop be there? Yeah, so it's hard stop here is really hard because ideally, if you see price really dumping really heavily, then you would stop out. Or let's look at a different time frame, right? Yeah, 2 minute. So I would get out here at 1.8 hour loss. Yeah. But I know that by the time, yeah, here. All right, yeah. But then also like the 2 minute gap is also smaller. So even though even still you enter here, but yeah, you would get out here. Hard stop would be here. Yeah, and normally when I mean 1 hour, I'm not like here. I'm not entering like here based on here. I would still enter based on this much loss. So this would be my 1 hour here, not like this much, like this, something like this. Okay, so this would be like still 1.8, 1.7, 1.8 hour. Yeah, it's an extreme case because of this candle, but also like this is a V shape, guys, a V shape. So there's a really high chance this is successful. It's an A plus, right? A plus because we swept London low, Asia low, inversion, order block here, and then we also have a strong down liquidity. We also have LRLR. Yeah, so it's a really good setup. You can see it. We obviously did chop a lot, but yeah, it's a good setup. So yeah, this is one of the examples of these sessions. And what are the timings for London high and Asia that I use are London is, you can see it here. So yeah, the indicator for this I'll give you guys. So the indicator is ICT kill zones and pivots. It's this one. So that's the one I use for marking London Asia, and it's the default settings. These are the settings. It's just the default settings. So Asia is between 20 to 00 and 2 and 5. Yeah. And these are the best levels, guys. No matter what someone tells you, I really prefer these over anything. Like these are the best levels, and I'll give you some examples. I'll prove what I say. So so this was one of the setup, Friday 28th. This one. Now let's see on Wednesday. The next better setup was on Wednesday. So that will be 28th. No, 26th. This is a bad setup. Never take that. Yeah. Yeah, Wednesday was such good price action. Yeah, you can see that here. As soon as London high gets taken, we inverse all the way to London low. To the tick, guys. To the tick. As soon as London low is taken, we inverse. Like how accurate are these levels? Not this low, not this low, not any other low, but this low. We inverse, right? As price, look at this. Price doesn't inverse unless it takes out London high. Not this high, but this high. Yeah. Same with Asia low. Look at this. To the tick, not this low, not this low, not this low, but this low. As soon as this low is taken, look at that. Look at that. Look at that. The whole structure shifted, right? So these are the levels, guys. Like kill zone levels. Can you show the indicator again? Okay, yeah, of course. Oh, it's this one. It's called. I already made one that has these already, plus a 50% 9. So I'll give you the script soon. It'll be like an open source script, so everyone will get it. And you can just copy paste in your Pine editor and run it. But yeah, it's called ICD Kill Zones and Pivots by TFO. We show how you do the whole analysis time frame by time frame. Yeah, I can show you that. Yeah, no worries. Yeah. So let's say I woke up on this day. I would see what I would do is find the draw, right? Now, since you already so draw can be on a daily time frame or like 4 hour, 1 hour. Like you have to look at higher time frames, even though like they don't matter that much. You still want to know, right? So for example, on the daily, why I knew this was going to dump is because Playboy also said these are relative equal lows, these ones. So they will get taken out, right? And they did, right? You can see how good equal lows and equal highs are. These are relative, like really close to each other. Algorithmic, not algorithmic, but really close. They'll get taken out. So I knew that was going to get taken out. This was Monday, Tuesday, Wednesday. Yeah, it will all just dump. We had an LRR here. This one broke out. We also had this one that got taken out. Yeah, so this is how I got my bias, guys. I knew that this inversion, we had an inversion here on the daily. And we closed like this. It made no sense to pump the next day. There was no reason. We had to test this trend line here, right? Because we broke out of this one, didn't we? Yeah, we broke this one. And look at that. How algorithmic is this, guys? We broke out of this one, retested it to the tick next day, broke out of this one, dumped, broke out of this one, and retested it to the tick. Like it's really algorithmic, guys. So this is basically you can use this, yeah, 4 hour, and you can use like 30 minutes, 15 minutes, whatever you want. You find the daily bias, right? It is really hard. And also like you don't even need it because you just wait for either of these levels to sweep, take your trade and get out and just get done for the day. Yeah. Yeah, what was yeah, so that was one really good one. We also had a decent one on Tuesday. Yeah, on Tuesday I kind of got like manipulated, but it was really good. I remember. Yeah, this one. This one was really good. Yeah, so you see how these doesn't matter. These equal lows don't matter that much because these are not like one. Oh wait, these are 5 minute. Oh yeah, they do matter. Do we hit them later? I think we did. Yeah, there you go. Yeah, we did tag them. Yeah, so equal lows really strong. LR. I got stopped out at 32nd here because we inversed the 32nd, came back down. That's really good as well. These levels are really strong, guys. London low, London high sweep. Yeah, so that's basically it. These are this is basically about the overnight levels. Do you guys have any other questions about overnight levels? London high, London low, Asia high, Asia low. If not, then we can move on to data highs and lows. Yeah, so okay, so let's move on to data highs and lows. So this week, I don't have 30-second, 50-second on this trading view here. I have it on Top Step. I don't have it here, so I can't really show you that. But I have a play here that I've taken before. Okay, so this would be a 30-second play for a data high. So what is a data high, guys? So you go to Forex Factory, you see find a red folder news, and whatever red folder news is, and at that time, if you form like a abnormal wick, like a wick that is bigger than the body, generally is bigger than the body, the wick has to be significant, guys. Like if the wick is not significant, it doesn't count. Yeah. Yeah. So you wait for one side to sweep. Let's say if you leave a wick on the top, you wait for the bottom to sweep. Yeah. So we swept it instantly here in the next week, in the next wick. Find the inversion, right? We found a 30-second here. As soon as we close the bar, look at that, guys. We got tagged it. It's a really high. Any red folder news? What do you mean? Yeah, we have with a wick. Yeah. Any red folder news with a wick. Yeah, but the wick has to be significant. It can be orange folder as well, as long as it's obvious. Like, look at this wick, dude. It's such an obvious wick compared to the whole price everywhere. This wick is so obvious. It's a news wick, right? That's because so many people gamble news. Like a lot of people just gamble news, and a lot of algorithms also gamble news. So they leave their stops on the top of the bottom of the wick. and price has to come and take those stops to bring liquidity into the market to bring out other trades. Can you show us an example of data low too? There was one 30-second. It's there in Rising Stars. If you go to Rising Stars, you see the 30-second on Friday, yesterday. I got stopped out of break even, but yeah, you can see it never closed above. And that's not a significant wick, but you can still count it as a data low because you stepped one side and you came to the lower side. And the bigger the wick, the higher chance, you know. Another one was the 15-second. I think the 15-second. Yeah. Look at the one we had open. It doesn't really have to be a news event. On one of the days we had an open that was so big for Asia. I still think it was some news, but the open had a massive wick, and we took it out anyways. What day was that? I think it was. Let me check. Yeah, but okay, I'll find it. But this is what I mean. Like news events will always just take one side and always target the other side, and it's the highest probability. That's my highest win rate model. Like that's where I won the most, and so I'm confident taking like 15-second gaps as well. Yeah, one of these days we had it. I don't know which ones now. Oh wait, we're in replay. Oh my bad. Yeah, it was over here. Was it there? I think it was this day. Yeah, I think it was this week. Yeah, look at this wick, guys. I think this is also data wick. You wait for the high to sweep. We swept the high here. No inversion, proper inversion. And this would be somewhere where we get a proper inversion, right? And then you would come back to the wick here, data low, gets hit. So it's not just data, like these abnormal wicks have so many orders left there. It's a really good draw as well. Can you take trades off? Don't you take? I never take off internal liquidity. Internal liquidity is not a sweep for me. I do take it based on internal liquidity in the sense you mean fair value gaps, or do you mean like highs and lows? Because yes, so if you have a sweep, you highs and lows. No, yeah, no. I never take gaps based on internal sweeps unless there's an SMT. So by SMT I mean if you have ES that swept London high, NQ didn't, then I would take a short on NQ still because ES swept London high. But I would go break even quicker and trim 50% at 1 hour. It's subjective, like it comes with screen time. So the more time you give, you'll get to know more. Yeah. And also, okay, yeah, we'll come back to the checklist soon. So that's the data high play. So now I'll come to the other confluences in trading. So we spoke about liquidity sweep. I only trade New York AM 9:30 to 11. Sweeping highest and lowest price of previous kill zones give you the best reversals. V-shape momentum. So when you have like a V-shape, that is the strongest signature in price that we know that, oh, okay, yeah, we're cooked. It's gonna go in the other direction. And the V-shape has to be, let's look at any of some trades here. Yeah, this is the V-shape because it's an instant reversal, like 1, 2, 3, 4. Like you see how quickly we've inversed? That's a V-shape. When price looks like a V, this is not a V-shape. This is somewhat of a V-shape on a higher time frame. Yeah. So you have to look for these V-shapes, is instant reversals. Yeah. Draw on liquidity. So inversions fail when they're against the draw on liquidity. So you can see we have a news low and you're longing with a news low below. Why would you do that? Price will come back to that and grab it, right? So if you have, so one of the rules I do is if you have equal highs on top, I don't short. I don't short if you have equal highs on top because I know those equal highs will be taken 90% of the time. Yeah. So never inverse, take inversions if they're against the draw. By draw I mean the obvious draw. Like if there's a London low below, I don't see the, like why would you short? Right? Like if there's a London, let's say like there's an Asia high right here. There's a London high just one below. We take out the London high and then you try to short. Why would you short? There's an Asia high right above. right? Wait for that to sweep. Yeah. So don't go against the draw. Okay. Delivery from higher time frame. This is really important. This is really good because I'll tell you why that's important. You have to be familiar with market maker models. So what a market maker model is basically, I'll give you an example. So market maker model is something like this. Let's talk about a sell model. Here, get a reversal. Yeah, so that's a market maker model. So what happens is, let me draw these first. I'll explain what I mean. So it's also the ICD 2022 model. I'll just explain you in like the easiest way possible. Yeah. So these are fair value gaps. Okay. So what happens is there's accumulation, that's consolidation. Basically, it's consolidation. You have a big move down, forming a fair value gap. You retrace back into the fair value gap. You come down, accumulate again, retrace back into the fair value gap, come down, get a market structure shift. That's basically when you close above the high here, forming a fair value gap, and then you come back into the fair value gap, and then you go up, accumulate, come back into the fair value gap, and a go up. So what I would do is, this is where I would look for a long. This is a higher time frame, by the way. This is like, let's say this is 4-hour market maker model. What I would do is go into a lower time frame in this section, get an inversion here. So there will be some sort of liquidity here that will sweep on a lower time frame. On a higher time frame, we'll be bouncing off a fair value gap in a market maker model, and I would be inversing here. And this is where I would go long with a stop below this. So that's why. So the conclusion is wait for delivery from a fair value gap. It's really good. Like a delivery from a higher time frame gap is really good. Yeah, like a 1-hour gap, and you're taking inversion on a 1 minute. That is really good. That's basically the conclusion. You don't have to know any of this market maker. I just wanted to explain for those of you who know the 2022 model with ICT. Yeah. Singular gap in the leg. Oh yeah, this is so important, guys. So basically, you take trade off of FVG instead of liquidity. Huh? No, I'm not taking the trade off of F. Yeah. Oh, okay. Yeah, FVG is also liquidity because there's a lot of orders in there. Why does price form fair value gap? It's because there's so many orders there that couldn't get filled, and price just dumped really quickly, right? It's all of this has liquidity in it. This is all still that's why price pulls back to a fair value gap. Why does and then dump? Because it has orders in it. So it's called internal liquidity. And price moves from internal liquidity, internal range liquidity to external range liquidity, and same vice versa, external range to internal range. Fair value gap and order blocks, they're internal range liquidity, and external are these values. It's a lot of ICT terms here and there. You don't have to know all of this, but I'm just answering your question. I mean, higher time frame. Yeah. So that's still internal, right? So this higher time frame gap here is still liquidity. And you would also want a sweep. Ideally, you won't want a sweep and bounce from a high time frame for an A+ setup. A+ setup should have all of this. It should have a sweep as well as bounce from a high time frame gap. Yeah. And then you get a lower time frame inversion. So that's what you would do. Because that's still liquidity. There's so many orders there that get filled and then go up. There's so much other things that you can learn, like optimal trade entry, 0.5 fib level, 0.68. I'll give you a playlist for ICD, and you can watch that if you want later. But yeah, so that's the delivery from higher time frame. Really important. Singular gap in the leg. Let's come there. So important. Let's find a good setup. Maybe this one. Yeah. So yeah, guys, this is what I mean by don't take 5-minute trades, because like there is no gap. Look at how choppy price looks on the 5-minute, and you never get more than 2 hour. 1 to 2 hours is really normal on a 5-minute. So I don't like it. If I go to 3-minute, we have a gap here, right? So this is a 3-minute gap. You can see price never close below it, ever, right? So this is what I mean by singular gap in a leg. So what is a leg? A leg is basically when we have candles like these. So we have like, let me draw. Yeah, so we have candles like these, right? So whenever all these candles are the same color. Oh, what the fuck? Yeah, so all these candles are the same color. That's when it's called a leg. and it's between other candles or other colors. So these two white candles are a leg because they're between two green candles, right? These three white candles are a leg because they're between these two green candles. That's a leg. Candles between the colors of two different candles. Why am I going to this page? Yeah, so that's a leg, right? So three red candles between two green is a leg. Three green between two is a leg. What you want to do is find the singular gap in a leg. If there is no singular gap, you move to a higher time frame or combine them. If you go to 1 minute, you can see this is a leg, right? Three white candles between a green one, and there's only one gap. So you don't take this, guys. You wait for both gaps. You take both gaps as the inversion, right? Because these are all the candles between these two green candles is these two candles. You wait for both, and then you take a trade. So if I go to 2 minute, I would take it here. Yeah, so I can move to a higher time frame until I have a singular gap. Yeah. Did you have any talk about which time frame do you use when liquidity is taken, and why do you use one over the other? What do you mean? Oh, okay, yeah. So okay, so let's say like London high is taken. I would see whichever is the cleanest. Like here, let's say London low was taken, Asia low was taken. I like the 1 minute. I like the 1 minute a lot because I would get a better entry off of 1 minute. I would get an entry here at 582, right? I would get an entry here, and I would wait for both the candles to close. So I would get a really good entry at the 1 minute. I would get an entry just above the close. So I would wait for both of these gaps to inverse, but the safest option is to wait for a singular gap to inverse. So if I wait for the 2 minute to inverse, I would get a worse entry, but it's really safe. I know then for sure it's a higher chance for it to go up. That's what I mean, freaking tenders. Use both gaps because the first is small, I said. It doesn't matter, dude. Like the worst gaps are these ones. The fucking smallest gaps, bro. They're so bad. Like I hate them. And even one tick fair value gaps, like one tick fair value gaps, they are so bad. There's such a manipulation, dude. So you have to wait for everything, all of the gaps in the whole leg. Even if it's one tick, you have to wait for that one to inverse as well. Why don't you enter on retest? Because a winning trade should not come back to entry. That's what I know from backtesting. Like once we inverse and we take a high or a low, it should not come back to entry. Like most of the winning trades don't do that. They just instantly just pump or instantly dump. Because we inverse the whole idea of inversions is because you're inverting the order flow. You're inverting all these big orders in the institution. All these big sell orders. You're canceling them out. So why would you come back to entry? Like there's no reason because you took out all these big players. There's no reason for them to go short again after just being taken out. Who's that? Yeah. Whatever's Polinar. Yeah, so that's what I mean. Like I don't take entries on retest. Who's watching porn? Bro, I don't know who's watching porn, yo. Watch it later, guys. This is serious, guys. Come on. You have to be respectful. Guys, look, I don't get paid for this, dude. I'm volunteering. I want to help you guys. Like, Playbit's really helped me with this model. And I want to help you guys back, you know? So, you got to be respectful, guys. I'm volunteering to do this, guys. Okay, yeah, so that is what a singular gap in the leg is. So, LR, yeah. So yeah, so I think everybody knows what LR is. Do you know who doesn't know what LR is? I think everybody knows what trend line is. How about entry off of an ILM? What do you mean, Yoma? Entry off of an ILM. You mean you inverse and then you come back to the ILM to retest? No, I don't wait for that. If I have an inversion, that's where I would go break even, to be honest. I would get out. I don't like retests unless we're so high. Like, for example, let's go to the 3 minute here. Yeah, this was also a good close. Maybe the 2 minute. So if I decide to enter on the 2 minute, we already took the internal high. Then I would probably, this is not the internal high, sorry, this one. We already took it out, so I wouldn't enter at all. Yeah, we already took why is this not the internal high? Is because it's in the same leg of the gap. This will be the next minimum high at 1 hour. But we already took it out in the same channel, so I wouldn't enter on the 2 minute. I'll wait for a better close. Like let's see the 3 minute close. then I know, and we also formed an order block, so that I know that we're gonna go up. Yeah, thanks, man. Thanks, David. Okay, so SMT divergence. It's really good. It's really important as well. It really helps me. It's a really good conference to have. What I mean by SMT divergence, let's try to find some. Yeah, so is that an SMT? Let's reset. Maybe on a higher time frame, we can find something. SMT here. Yeah, price just stay up, don't. Did we take out any of this low? On ES, yes. And this is so correlated. There's no SMT at all. Maybe this one. Yeah, maybe this one. Yeah, oh, it's really good. Oh, this one's really good, I think. This one, yeah. Yeah, you can see here. Price swept on ES at this time frame. Oh, why can't I place this? And the same time will be this high. Yeah, so you can see how that helped. ES took out this high, NQ didn't. That's a bearish SMT, and we dumped right after that. You can see that here. So that's an example of an SMT. This is not an SMT I would enter off. You can see the time frame. NQ didn't take this high. ES did. NQ is weaker. We dump. I don't use EMS, but I don't use EMA. I don't use EMA. I could put a 15-minute EMA if I want on the chart, but I don't need it because I'm scalping. 15-minute doesn't matter to me at all. EMA is not my thing anymore. I used to use it before, not anymore. From backtesting, I don't need it. Yeah, because the issue with hose on my bongo, nice name. The issue with that is with EM, like you're gonna get analysis paralysis, dude. You're gonna have too many indicators. You're gonna have too much stuff. You don't need EMA. At least with my model, you don't. Yeah, so that's an SMT. Another type of SMT is when ES takes out London high, NQ doesn't, or let's say NQ takes out London high, ES doesn't. It doesn't matter what takes what. I always enter on NQ because that's generally more cleaner. ES has a lot of equal highs and lows because ES is more algorithmic, but those equal highs and lows don't get hit that often in ES. But NQ almost always gets hit. Yeah. So that's an SMT. Order blocks, guys. This is so important. Order blocks are so good, dude. They're life changer. Order blocks, like, if it forms an order block, it increases the guarantee of the inversion. I would say like by 20% more. So if the inversion had a probability of playing out 70%, with the order block, we'll go up to 90%. And I'll explain you what an order block is perfectly. Yeah. So let's say we have 3 candles, 2 green candles, and 1 black candle. This is a bullish trend. So if the third green candle closes above a black candle, it's like a sandwich, guys. It's like a sandwich, and the third candle is closing above the high, not the wick, guys. Ignore the wicks. Wicks don't matter here, okay? Of the candle close, if the green one is closing above, that's a bullish order block. We have a sandwich, another sandwich. Anything that looks like a sandwich, guys. This looks like a sandwich. 2 black candles, 1 green candle. Whenever another black candle closes above the high of the green candle, that gives you an order block. You see, it doesn't have to be this candle. It can be the next candle as well. Or there can be multiple green candles here. Whichever one is the highest, lowest, I mean in this case lowest, and we get a black candle below that, that's an order block. There are many ways to call an order block. I think that's the best way of what I call an order block. Do you include wicks on order blocks? No. I use wicks on order blocks to trail my stop. I'll come there as well. That's really good. So yeah, you can see this. You see a sandwich here. White, green, white. This white candle closed above this green candle. So, oh, fuck. Okay, that's gone now. Okay, it's here. Yeah, so this one. So this one closed below. So yeah, that will be order block. And what happens with order blocks, guys, is fuck this man, dude. Yeah, what happens with order blocks is price generally comes back into it and then bounces off. Like before an order block, price will come back and bounce off. So the best, let's say you're in short here, right? Let's say you shorted like this gap. Let's take a random gap. Let's say there's no gap here. Let's say you shorted this gap. Ignore being stopped out and stuff. Okay. Let's say you're in short here. Yeah, you're in short here. You're shorting. I would trail my stop here. If my entry was here, I would trail my stop right below the wick of the middle candle. Does an order block need to be before the low or after? What do you mean? What do you mean before the low? So it can also form during an inversion. Before it reverses, it has to be after. It doesn't. Before don't matter. Order block has to be. Before. Oh, you mean before? Yeah. It's also really good. Before inversion is also really good as long as it's after the fair value gap that you're inversing. It has to be, the order block has to be after the gap you're inversing, right? So let's say we're taking an inverse here. Let me find a good order block play for you guys. Hold on. Let's come here. 2 minutes. Yeah, maybe just let's just see this one again. Oh, this is too choppy, bro. Fuck. Let's see. I'll try to find a good example with order blocks. Yeah, this is okay. Like if you're taking this gap, it's too small. But let's say you're taking this gap, okay? Oh, it's okay. It's good points. It's anything. So ideally, I want a fair value gap between 7 points and 15 points. Then only I take it. I don't take it if it's below 7 points and if it's above 15. So this is 9 points. It's good. It's good. So what I would do is, let's say we sweep something here. We don't have a sweep, so I wouldn't take this. But you would also take a short here. And this is a good trade because this is the gap you're inversing. We have formed an order block after the gap. So you know where the order block is? It's this one. It's this sandwich. So these two white candles, this one and this one. Between these two green candles. It's I think order block comes after, like you have to keep looking at them a lot to know. But yeah, this is an order block. So we close above this, below this green candle, so that's an order block. Why not if it's above 15 points? The issue with if it's above 15 points is because the gap is too big and your contracts, like you can only enter with like 1 or 2 micros to risk 200. And yeah, if the gap is already so big, I don't see like how much volatility do you want, because this is a big dump, guys. 33 points, like inversing that, and then I don't think it works that well for me. It will still work, but consistently, I think I've made it like 7 to 15. I've backtested so much. I know 17 15 works the best. I think that's the best value for inversion. Yeah. So did you guys understand what order blocks are? If not, you can talk, you can text. I'm happy to answer. Yeah, if you have any questions about order blocks. Is an order block flipped? Is an order block flipped this breaker block? Yeah. So if an order block gets violated, it becomes a breaker. I don't use it, but it's a different model. It's called the unicorn model. I can explain you that if you want. Yeah. So this would be a unicorn. So this is like a really tiny order block here that failed. So this is a bullish OB. This one. This is a really bullish OB because we closed above this white candle. So this green and this green closed above this white. So that's OB. No, wait, sorry, bearish OB. We need a bearish OB for a unicorn setup. So that would be something like this, between this green and this green. So it would be here. So this candle would give you an order block here. As soon as you violate that with the fair value gap, that becomes a breaker. And what you would do is wait for price to come back into the breaker and then long. That's a unicorn model. Not here, but that's a unicorn model. We need a fair value gap and a breaker. So an FVG is a 3 candle pattern. Is an order block also a 3 candle pattern? Order block can be many candles. It doesn't have to be a 3 candle. Like anything can be, like, to be honest, like people see order blocks very differently. I generally want the order block to be like 2 or 3 candles apart. Like I wouldn't like call everything an order block, right? Like you wouldn't say, oh, between this white candle and this white candle, so this would be an order block from this green. No, there's too many candles. It has to be like 1 or 2 candles for me for it to be an order block, or maybe instant. The thing that works the best for me are these ones, instant, like a sandwich, green, red, green. That is so good. That's like a perfect order block, and price will come back, tap into that order block, and just boost up. And then if you get another sandwich, that's called a propulsion block. So we'll come back into this order block from a green candle, then from a black candle, another green candle engulfing the black candle before that. So that's a propulsion block, and that means like you're really bullish here. You form 2 order blocks, and the second order block tapped into the first one. So that's a really bullish signature in price. Interesting. I've only used order blocks on high time frame for the last up or down close. Yeah, it depends. I use these. Yeah, there are many ways to defend order block. I prefer these are the best. I think the sandwich pattern is the best way to defend order block for me. Do you ever consider hidden OBs as potential high time frame entry points? What do you mean hidden OBs? What's a hidden OB? Okay, so another thing is like order blocks are so good on the higher time frame, right? So you can see like this is an order block sandwich, green, red, green. This is OB plus. Candle never closes below. You retest the OB so many times. 1, 2, 3, 4. It tested it 4 times, but it never closed below. So that's really strong. We just boost up and tested it again here. Again here. It never closed below this candle. So you can see how strong. And once it closed, it dumped. So yeah, hidden behind FAG, so an order block extends through an FAG without any. I don't understand what you mean. Hidden behind fair value gaps. So an order block extends through a fair value gap without any wicks. Can you put an example? T19, or maybe you can draw or something and put it in chat. I'm not able to understand you. Yeah, so that's about order blocks. And yeah, guys, psychology. Oh, it's my favorite part. I love this so much. Guys, the market's always going to be there. I don't see why people take setups like when I was not profitable. What I used to do is take a setup, A plus setup. It used to fail. I used to lose 200 on a 50K account, and I'm like, oh shit, I'm down 200. Like I have to win a trade and then win another one to be profitable for the day. I'm like, oh shit, that sucks. What I would do is like then just gamble. I lost one trade, instantly reverse, double risk. I used to lose another. Then I lost 400. I'm down 400 on my account. Then I used to like, I'm like, okay, I'm down 400. Might as well just full port, you know. And I just blow the account. I've done that so many times, dude. I've blown like 20 fundeds, and now I'm okay. Now I'm like, okay, I'm never doing that. You take a loss, guys. It's okay. It's part of the game. Like you're always gonna take losses. It's okay. I did take a loss on Monday, and I was okay with it. Like, and then I got a 3-hour play the next day, data play. So it's okay. Like losses are part of the game, guys. So what you're doing is trading is really hard, dude. You are gambling, but you have the odds of the house and not the player, guys. A plus setups will always be there. The market's always going to be there. How many times have you taken a loss, and the next day you see Playbit, everyone in like fucking wall of gains, all green, and you just blow the account the day before? Or how many times have you blown the account pre-market and then you've seen like A plus setup play out in New York Open? It's so many times, guys. So yeah, don't do that. The market's always going to be there. Yeah. Yeah, I know, because I've been through all of that, Queasy. I've lost like 10, 15K. And now I make that in a month really easily with inversions. I got a 25K payout. I got another 14K in February. So once you're okay with it, like once you're okay, like to know that the market's always going to be there. Yeah. So yeah, what is the definition of A plus setup, and what would be a B plus setup? Okay, so you see all of these. That's an A plus. So if you have a liquidity sweep, like here, this is an A plus. The only issue is it's not in New York Open here. I forgot, I didn't see that, so it's an A. But if this let's assume this was in New York AM, this would be an A plus, because we have liquidity sweep, we have London low sweep, we have a V-shape momentum. This is a V-shape, right? This is a V-shape, instant V-shape. That's an instant inversion. 1, 2, 3 candle inversion. That's where's the link for the Miro? I'll send it to you. I'll send the link after the call. Yeah. Instant inversion, that's 3 candle, that's a V-shape. We have a draw on liquidity. We have London high above or a high of day. That's the liquidity. So we have a draw on liquidity. It's in the direction of the draw. Delivery from higher time frame, I don't know if there was, but let's assume there was a 50-minute gap that we bounced off of. Or like a small gap that we just wicked into and came back up. That would and singular gap in the leg. You can see how in 2 minutes we have a singular gap here. Low resistance, we have an LRLR as well. I'll come to premium and discount. That's the most important thing. I'll come there as well. And we have an order log here. So that's an A+. So that's what an A+ is. What would be a B+ setup is basically we don't have a V shape, or we don't have delivery from a higher time frame gap. We're not in New York AM. So that's a B+. Something like this. Yeah, what was the question? Let me see the question. Hidden behind FHG, so an overlog exists on FHG without weakening it. Order block. So you inverse the fair value gap before. So you form an order block, then form a fair value gap, and then inverse. Then it wouldn't matter because you need the order block after the inversion or after the fair value gap. So A+ is all these points. Yes, you need all of them together for an A+. And now, guys, I left the most important thing for the last is the premium and discount zones. So this is really important. So what do you mean by premium and discount? So what I do is when I wake up, oh, that's the wrong time frame. Yeah. So let's say I wake up here, somewhere here, okay? At this time, what I would do is mark a line, like from open, highest point to the lowest point. So lowest point is here. The highest point is, let's say, here. I woke up here, somewhere here. And the midline is the 50% line. So that would be here. Okay, so let's see if I'm correct. So let's say if we take that, the 0.5 level is going to be the dotted yellow line. Yeah, perfect. So you see the dotted yellow line is the 50%. Anything above this yellow line is premium. Anything below is discount. So what you want to do is take only shorts when you're above the yellow line and only longs when you're below. That's a very important confluence, guys. So ideally, when you see blend and high, we should want to short back into the 50% level, back into discount. And if you sweep Asia low, you would want to long back into the 50% line. Yeah. So that's premium and discount. I think that's the best way to mark out premium and discount is take the range from previous day 6 o'clock open to the current time, the highest and the lowest levels. I have a script for it. So this script that does it for me. So I never have to mark it. I'll give you the script in a few days. It's just a script. It also has these London levels in it. So yeah, so that's premium and discount. Always short in premium, always long in discount. So that's what I do. And this 50% line is such a cheat code. Sometimes what I would do is if ES or NQ is bouncing from this level, I would also take a long. If I haven't taken anything for the day, and if all London levels and all Asia levels are already taken out, then I would just take a bounce on 50% and take an inversion there. That's also a really good inversion. I'm excited to learn all this more. Will you be streaming pre-market daily? If there is news, I can come on this channel if you want, and we can take trades together for news events. Yeah, PMI. Yeah, we can do that. We can do that. We can come here live and take news trades. Oh shit! I don't know why is he there. I unmuted him. Okay. Do you take orbs too? I don't take orbs. The thing is, orb is profitable. Like from backtesting, I know orb is profitable, but I don't like that. Like it's really mechanical and it's too easy. I don't like orb, dude. It's a really good model. I know it's profitable for sure. If that's why I have a bot on trade. I have a bot here that takes the orb for me. But it indicates the orb, but it doesn't take it. It works really well. I can show it to you, but I don't want to leak the script probably. Okay, I don't know if it's on this account, but yeah. So the thing with Orb is I wanna put it into Ninja Trader, convert it to Ninja script, and then make it run there. And in that case, I'll just put a prop firm account there and just take Orb for me for like months, and it'll just slowly grow the account because I know Orb's profitable in the long run. But if you're like lazy, you can just take the Orb every day. You'll make money. Yeah. Any questions, guys, about the checklist here? Anything you didn't understand, I'll be happy to help. Yeah. Factory, can you mute, please? When you're dude, I'm working on it. The thing is, I have university, dude, and I also have a job, like a full-time job. So I have like a lot of things on me that I have to work on. And I'm also like trying to do this one. I'm trying to help people in Playbit because Playbit's always helped me, right? I will just give back to the community. So I'm trying to do everything, trying to trade. So it's really I barely have time to write scripts, dude. But I'll try. So this is a decent example. Let me check. You got a sweep of data low. Yeah, dude, that's really good. Yeah, yeah, we love it. Yeah, it's amazing. Yeah, it's a really good inversion. Yeah, yeah, that's really nice, Trev. Good work. Good work. Oh, wait. Where the fuck do you long? Why would you long there? Wait for the inversion and then long. I appreciate it, Achi. Appreciate it. Yeah, so anybody has any questions about anything here? These are the secrets to know how many contracts to enter. Uh, we went over overnight highs and lows as a summary. We went over data highs and lows. What is my variation of ILM? What I use for scalping. I'm only explaining this so you can also follow my calls because I take like 30-second entries. Like you can see the one on what was the one on Friday. I said I'm shorting from London high. Let's see. It was 1 minute. Yeah, we can check it here. I'll tell you what I mean. Okay, so one of the trades was so fast and people got mad, and I'm like, guys, it's my model. I go break even on internal high. I've mentioned it. Like I even wrote like B would be 626, and people had 3 minutes to get out. I'm like, guys, can't be mad at me. Wait, hold on. I'll explain you what I mean. Yeah. So this looked like a really good short, right? We swept London high. We closed below right here. I think I took it on 30 seconds. Hold on, I don't know. Where you go? Yeah, here. So we closed here, right? And form an order block, guys. That's so strong. I had a really high confidence, right? We formed an order block. We broke this LRLR, right? We broke this LRLR. Why would we come back up? And as soon as we came back up, look at how much we displaced, guys. So anyways, if you took like put a stop here, you would get stopped out anyways. And this is where break even saved me, guys. Look at this. This is the leg. This is the next internal high. Or maybe this one. Yeah, I had marked this one before because I didn't know that was going to happen this way. I saw the V-share. I was going to enter here and go break even here. So I had marked this level 626. I even wrote it in chat, guys. I would go break even at 626. We took it out, and look what happened. So this is where break even would save you. Internal lows, because a winning trade should not come back to entry. If it does, then it's going to just completely go in the other direction, right? You know what I mean? And you had like 2 whole minutes to get out at break even. So like this whole minute price did this, took out the low and came back up, and you could have gotten out anytime. So yeah, so I got out here, and it's really hard to signal all of this, like everything. I can't signal, dude. Like I can't signal bot everything. Like you have to take trades on your own. So this is what I mean. So I wanted to explain the model so you know what I'm doing, and it really works. So this is what I mean by break even. Like saves you more often than not. I would rather go break even than lose. Trade. How would you recommend to trade PM sessions? Oh, good question, dude. That's a really good question. For PM session traders, what I would do is mark the AM high and low, or the high of day and high of low, because London and Asia levels will be swept already. If not, you can wait for these levels to sweep again in PM, and then take a trade after these levels are swept in the PM, or you would wait for and then take a trade in the other direction for PM session. I would recommend it. So if instant move doesn't happen, you go close break even to safe. Yes. I go break even after a liquidity level is taken, like an obvious one. See, this is the low. Next internal low. If it gets taken, I don't see why we will come back. And it's gonna happen many times. It's gonna come back, hit this order block, and go down again. I would enter off another order block. I wouldn't. I'm okay with getting stopped or break even because I know it's gonna save me in the long run, right? I'm playing for like years of trading, just for weeks. I want to trade for like years, so I know over time this is what's gonna help me the most. That's why I go break even here. People don't like it. People don't like going break even instantly. But you have to trade mechanically, guys. You have to trade because you're going against algorithms. You can't be emotional. Getting stopped or break even, you can't be emotional. Yeah. So another thing is prop firms, guys. The top step is expensive, $50. If you're just constantly blowing accounts, you can use Bullnox. I basically barely make any money from this because it's anyways you're paying $15 for the account. So I'm not shilling the company or something to make profit. But if you use this code, you get a 50K account for $15. Same target. It's you even get a better dot on a TopStep, and the platform is the same as TopStep X, 100% same. So what you can do is put code Nix in Bullnox, and make sure you use Project X here as platform. Do you trade between TopStep and Bullnox? I will start trading Bullnox from this week. I have TopStep on side. I have a live account on TopStep as well. I put it on side because I do trade that as well, but I want to try out Bullnox because I know they pay. I know someone who got a 30K payout from Bullnox. And for $15, it's a really good steal. $15 for 50K account. And you can also pass it in one day. So I'm going to use Bullnox for the coming week. But they got trading dot on though. But yeah, look at how much it's 2,500, and profit target is 3K. Why would you go up 2,500 and come back down? Right? Like it shouldn't happen in any case. Like you shouldn't make 2,500 and come back down to 2,500. It's the same as normal end of day drawdown. It's pretty much the same. Like, and it's more than TopStep, which is why I like it. Like trading dot on is not a really bad thing. As long as you're winning more than you're losing. And it's $15. Like you can over leverage that as well. How are you gonna go about copy trading between the two? I have different laptops, dude. Such I can run it on different. Do you pay activation fee? Yeah, after yeah. And the promo is gonna last for a while, dude. I think the promo is gonna be here till March or June. I think. I made a ticket to extend it, but yeah, it should work. How much would you risk to degen these? For Bullnox, you can risk. So if you only take A+ setups, dude, you can pass them in a day. Because A+ setups should not come back to entry. So you can pass them in a day, dude. You can take like 1 or 2 trades and pass them in a day, and then just go fund it. Or you can take it slow on TopStep X. It's up to you. But yeah, I really like this, and use Project X. I'm gonna start this from Monday, from tomorrow, guys. And I know that they don't deny payouts. I know people have gotten paid out. How much is the fee when you have? It's the same as TopStep. Like if the fee wasn't the same as TopStep, they would go bankrupt, guys. They would make money. Is trading drawdown once funded? I'm not sure about that, Ghost Cat. I'm not sure about that because I'm also starting with you guys. I'm not partnered with them or anything. I just know the company's good. I know they pay, and they don't deny payouts. And it's not a really problem for me. Like I'm okay with this much trading drawdown. I never go that much down anyways. Yeah, because you'll have to lose like 10 trades in a row to hit this. I don't think I'm ever going to lose that much. Will it be sketchy if I got property manual just enter and exit on one without any strategy drawn? Yeah, I know. It's not like you mean hedging, like long one and short another. Do it on your risk, dude. I know TopStep denies payouts if you hedge. I don't know about Bullnox. What you could do is like make 2 Bullnox accounts, long on one, short on the other. And you can do that. Like you can make 2 Bullnox. I don't recommend it, but you can make a Bullnox account on your name, one on your friend's name, long on one and short on the other, and pass one and then get funded that way as well. Yeah, that's up to you. I won't recommend that though. Yeah, guys. Any other questions? I mean, to be fair, I hope I could help, guys. Like, I know this is hard. I know this is really hard, but I'm really trying. Like, it worked for me. I want to help. I want to help some other people. Even if I could help like someone become profitable, it would really mean a lot to me. Yeah, because I was also in the same phase, constantly using, um, and then I had to like grind a lot. Like, I had to backtest a lot, get a lot of screen time. Like, I was on charge the whole day, and then I came up with this, and I think this works the best for me. Yeah. Where do you call out your trades? In Rising Stars, in hashtag Rising Stars. To be fair, like, I don't want a fully signal bot, because if I fully signal bot, then you guys will never build your own model. If I would follow Hunter all day, I would still be trading with Playbit on Hunter's chat. I would never learn the model myself because I'm comfortable with trading like this, right? So I will try my best because I know people want to eat too, right? Like, everyone wants to eat. I know it. Like, I will give my setups, guys. I will, but in the end, it's you versus you, man. Like, I can't press the button for you. So I will give I will give almost all of my trades in Rising Stars, but I'm not gonna always like say I'm in, I'm long, I'm short. Like, I'll just put the setup and I'll say I'm taking it or something, or I'm break even. But yeah, I'll try my best. Dude. I know I want to help everyone trade, but yeah, can you make a screenshot? I'll send David. I'll send a link to this board, and this checklist should be in the Rising Stars channel. Thank you for trimming and setting to be how's my psychology. Yeah, dude. Yeah, trimming and setting to break even really helps. You might have a lot of break even trades, but in the end, it's a free trade, right? And you might go break even so many times, but then, to be honest, if you take this mechanically, you will have a 90% win rate. If you go break even mechanically like this, you will have a 90% win rate for sure. But then you have to be okay with not taking a trade every day or not winning, having green day every day. You have to be okay with like half the days being break even. Like, that's how I trade the Topstep live account. I take like 1 trade a week or 2 trades a week because my maximum loss limit is so low. It's like 2K. A daily loss limit. So I can't take more than 2 trades in a day on the live account. So I go really slow on that. Thank you for trimming. Don't Playboy take internal liquidity trades because he been talking about them in the free. Yeah, Hosorongo, that's I did that course long back, so I don't know what internal he's talking about. But I prefer external, dude, because I know more often than not, like, external liquidity is what matters because price will draw to the external anyways. Price moves from ERL to IRL. So I know that if I sweep external, then I can trim at an internal, right? And that's easier for me. But if I take a trade at an internal, I don't know which external is going to hit. It could hit the external in the opposite direction as well. It doesn't have to be external in the direction I'm targeting, right? So I just feel more often than not, I want to wait for an external sweep. What's ERL and IRL? So ERL is external range liquidity. That's basically London lows, previous day highs, previous day lows, like an external value, like something that's very obvious. Like, this is an external high for this range. There's an internal. Internal could also be like a fair value gap, order block. That's all internal. So price moves from a fair value gap to external, and external back into fair value gap. So it's external to internal. So yeah, it's an ICT thing. You can I'll share a good ICT playlist as well for you. Wait, hold on. It's called ICT No Rant. If you want, I'll put it in the link here. Yeah, and you can watch this playlist and you can learn about ICT. It's pretty small. Like, someone's condensed it into like a small thing. It's really good. If you want more idea of what I mean, it's got market structure and stuff. Everything's got market maker models as well. Can you send the PDF? The plus Who's on Longo? It's in Rising Stars. Go to hashtag Rising Stars. Go there, and the playlist is in there. And you have to go up. I love the strategy. It's not too complicated. Lets me keep the money that you made with good trades. It also has good psychology. It takes a lot of. Yeah, dude, Adam, it's really good. I think it works the best. It's really quick. You get in, get out. Sometimes you get done like before 10 o'clock. And you don't have to wait for like, because you see like the 5-minute trades, 5-minute islands are so slow for me. I have to wait like hours. So I don't, that's not my style. This is the thing, you have to find your own style, dude. You have to use a model for yourself. Like you have to backtest, you have to grind. That's the only way to make a lot of money with this. After getting stopped in B, would you retake after another candle close outside the Ferrari gap? No. If I get stopped at B, I would breathe. I'm like, because it's so mentally frustrating because sometimes you go 1 hour and you see like 200 profit. You could have taken that profit and just be done for the day and had a winning day and you still hold. And it comes back to break even and you get so mad. You're really emotional, dude. But you know that in the long run, if there is no place to trim, like if like let's say I was up 200 here, and if we haven't hit our TP, it makes no sense for me to like get out of the trade because I know eventually it's going to hit the target, right? Either break even or target. So what I would do is for a re-entry, I would wait for an order block. If I get an order block after stopping me out break even, my entry would be close wherever the order block closes, and the stop would be below the order block. But that's really complicated. I don't want to go into like order block entries now. Why don't always trim when you move stops to BE? Yeah, I do that. Sometimes if the break even is too close, I don't trim. But at 1 hour, if the break even is at least 1 hour, then I trim. I need at least 50% profit, dude. Otherwise, I don't see the point of trimming. I will only trim if you're at least up 1 hour. And if I know that the trend is really weak and I don't see enough momentum, then I would exit 70% out at 1 hour. You team 50% first TP? Yeah. It depends. Like Saladin, like everything is really, it's all really depends on the setup, dude. But generally, yeah, I would say 50%, yeah. 50 to 70%, or sometimes 30 if I know that the draw is really obvious. Like I know drawing to equal highs above. Or if I know it's a data high play. And a data high play, I sometimes don't trim. Because the momentum is so high because of the news. Or sometimes mechanically, if there's no level to trim at, I would go 1 hour and then I would go break even. There's nothing on the left. And I would trim at least 1 hour or 0.5 hour at TP1 and then move to B. Yeah, you can do that. Also, what we can do is every weekend we can go over the A+ setups of the week, so you guys get a better idea of what the model is. So we can have a weekly recap for like 30 minutes every Saturday or something. We can do that as well if you want. Yeah, and then we can go over some setups as well in hindsight and see. NQ or MNQ. I always trade MNQ. I never trade NQ, dude. Oh yeah, guys. Another thing that really reminds me, data wicks like these are very different on NQ and MNQ. They're different lengths. Remember that. Even if you trade MNQ, wait for the sweep on the NQ. Sometimes the data wick might be here for NQ, but the MNQ one might be smaller or longer. Price reacts to the MNQ wick, guys. Wait for the MNQ wick to get hit. This is a gem. And you get to know this by taking a lot of trades. As soon as price hits the data high or low of NQ and you're on MNQ, just get out. Okay. So trim according to NQ, but trade on MNQ. Same with candle closes, guys. Sometimes on these smaller time frames, you get a candle close on one time frame on MNQ, but not on NQ. You don't enter, guys. You wait for NQ. NQ is really stronger than MNQ. MNQ is like it's not that good. Do you trade the strategy on gold as well? I don't trade gold at all. I only trade at NQ, MNQ, and sometimes ES. But it should work on gold, yeah. It should work on everything. On crypto, just take 5 minutes instead of 1 minute. So chart on NQ, but execute on, yes, exactly, Bozo. Chart on NQ, execute on MNQ. Yeah. Always do that. Always do that. Especially for like lower time frame phrase. Like, yeah, 100 is the same. Yeah, he also knows that. Yeah. He knows that the levels of liquidity are different on NQ and MNQ. Especially on like 30 second, 15 seconds. Sometimes you might get a close on MNQ and you might enter, but the NQ is not close and you might dump. So that sucks. Okay, guys. And like put all your questions, guys, if you want. And then we can call it a day here. Yeah. But I'm gonna get these platforms and we can see on Monday we can start trading them together. Yeah, if you want. Nix, I presume strategy works in Asia and London. Yes, Yes, the thing with Asia is I hate Asia. I don't take Asian trades. It's really slow. With Asia. In London, what you can do is if you're trading London, what you can do is wait for an Asia level of Asia to sweep and then take a short or a long. Like, and these are kill zone levels, guys. Kill zone zones, 2 to 5. So London's from 2 to 5. So what you can do is wait for an Asian sweep, like here Asia swept. There is no obvious gap, so you wouldn't short here at all. If there was an obvious gap, you can short, and then you can get like a 1 hour. So okay, there might be a gap on a smaller time frame, but these gaps are so small, like 2 points. Let's try to see, find something. Yeah, so it works on any time. So you can see Asia high swept. You see this gap here. I don't know what's the gap, good gap size for London session. For New York, I know it's 7 to 15. I don't know about these sessions. So you can see this here. This was a really good trade for London. As soon as Asia high swept, you enter short here. Stop would be a close above. This would be a break even here, and that would also be 2.28R. Yeah, so you can see as soon as you hit the low, you would go break even and saved you, right? It saved you from this loss here. You would make more, but it's more mechanical. So yeah, that would be a good trade for London. Yeah, you take Asia high, take a short, and trim at the next level. So that's 2.28R. That's a really good trade. Yeah, you made a lot of money from the short. Will you trade live again in futures and friends? Yeah, before news we can do that if you want. We can trade live news events. On 30 seconds, there's almost no time to switch. What do you mean? What do you mean no time to switch what? Between MNQ and NQ? Oh no, what you can do is have a split view. Like NQ on one side, MNQ on the other. That's what I have on my top step. I have NQ on one side. I mean, you can use this button here, layout. This is also on top step. So you can have, I have my NQ on one side, MNQ on the other. I make the gap on NQ. So I can see if you're closing around the MNQ as well. Yeah. So I have a split view. That's what I do on my NQ is on the left and then MNQ is on the right. Yeah, you can do that. You have the same button on top step, so you can do that as well. And I also have this indicator, guys, so you can see if Asia is swept. I can give you this indicator as well. I wrote the script for it. I'll give you everything once I have a little bit more time, and that does the 50% level as well. Yeah, I think that's. Are those indicators on top step as well? No. So you need trading view on the side. I have 2 monitors. I have trading view on one, and top step on the other, and Discord. I sometimes use on my phone. But yeah, or if you don't really have to, if you're okay with drawing these levels manually, like London High, yeah, I wake up, draw these levels every day. I'm okay with paying like $2 a month to have them plot for me. Yes, you're free to leave if you have no questions. I'll be answering some questions for like a while. But yeah, that's all I had to teach, guys. Just this model. I'll put this in Rising Star, this link, and whoever recorded that, Savage, you can stop the recording. It's okay. Thanks a lot, though. Really appreciate it. Maybe you can send me the link to it. I'll add you. Will DM Google Drive? It's almost. Oh yeah, yeah. I know. That would be really nice, dude. Thanks a lot. I really appreciate it, dude. I couldn't record because I'm on my laptop, and I'm enjoying me right now. And this laptop sucks, dude. It's like it's a MacBook Air, and it's got like 8 gigabytes of RAM. So Bullnox, you can only activate 3 Express accounts, and you need to make a trailing. Sledge, I'm not really sure about that. I have to trade with them and figure it out. But you can make a ticket and see. But dude, honestly, I'm not complaining, bro. It's $15 for the account, so I can't really complain, dude. Can't really complain. And it's the exact same platform as TopStepX, like Project X. It's 100% same. You can copy trade them as well. There's a few scuff moments in the stream because I opened Spotify. Yeah, no, that's okay, Savage. It's really okay. Also on these Bullnox accounts, if I buy 5 and pass all of them, you should be able to wait, Yama. You should be able to wait. You can't copy trade between top 7 Bullnox now. It's a different platform, and the platforms are different. But you can do it manually if you want. But yeah, I think this week I'll be only trading Bullnox. The issue is Bullnox are stuck on Rhythmic. I need to make them shift me to Project X. So I made a ticket. I'm waiting for that. Once I shift to Project X, then I'll also be trading Project X with you guys. Any other questions, guys? If no, then maybe we can end it here. Yeah. Okay, that was a long call, guys. I really hope I could help you guys. And you can I'll be up for answer any questions. Like any questions you have, I'll be really happy to answer, guys. Yeah, I'll send them, bro. Chess, yeah, of course. What should trade on Sunday nights, or are you going to go? I would never trade Sunday nights, dude. I would just wait for Monday open. What's the rush, dude? Yoma, the market's gonna be